A very, very hot topic in this market.
If you're good with moving, move.
What can I use the funds for?
Buy yourself a home overseas if you want.
Does it affect your income?
Does not count as income whatsoever.
Using a mortgage agent makes a lot more sense than I'm trying to do it on their own.
Whatever criteria they need.
Individuals who want to stay in their homes.
He was only going to save maybe $300 or $400 a month.
Welcome to the Mortgage Den. Today is February 6, 2025. And today I have with me Mike Dorego from Northwood Mortgage. Welcome, Mike.
Hey, Nick, how are you?
Today we're going to be talking about reverse mortgages, a very, very hot topic in this market. Mike, let's talk about the demographics of our society right now. What are you seeing out there?
Well, Nick, we're getting older, right? The population is getting older. Baby boomers are retiring. Gen X is right around the corner. We're seeing that about 49% of households between the age of 59 to 64 have a mortgage still. And about 14% of people 65 and over are still carrying a mortgage as well.
Do most of them want to keep living in their same homes?
The people I've talked to, Nick, yes, most people would prefer to live in their home. That's what it comes down to is reverse mortgage. It's a lifestyle product. If you're good with moving, move. If you're good with living in your home, live in your home. That's what I would say.
So what are their options, Mike? They want to stay in their home. You know, they're on pensions right now. They're running out of money, or, you know, they're seeing their investments dwindling a little bit. What are their options to sort of finance this lifestyle? One
popular topic is the home equity line of credit, also known as a HELOC. It's essentially a line of credit. You borrow money, you take money as you need it, you pay it back. You can draw from it and pay it back as you want to. The drawback with the line of credit, though, is that it comes with monthly payments. As soon as you withdraw money from the line of credit, you now have a monthly bill to pay back. And what could happen for a lot of people is eventually that balance will get very large because they end up using it to pay itself back. It's kind of like robbing Peter to pay Paul, right? So you are getting access to capital and money, but you're going to be basically having a monthly bill associated with it going forward.
Now, as a pensioner, is it easy to qualify for a home equity line of credit?
Well, that's the issue. It's very difficult. In fact, a line of credit is one of the most difficult products to qualify for. It's based on your income. It's based on your credit. And as you know, many pensioners, they don't have the same income they had when they were working. For a lot of people, even the idea of getting one is very difficult. It's not easy to get one, essentially. So there's qualifications involved, and a lot of people just don't have the option of getting one, even if they wanted to.
So what's their other option, Mike?
Another option is, downsize. You can sell your home if you want to. Sell your home, buy another property, live off the cash. But the third option is reverse mortgage. Reverse mortgage, in its essence, is a way to still live in your home and be able to afford to do so. Have the money to live in the house and not have to, be forced to sell it because you can no longer afford to live there.
Mike, so let's deal with some myths about reverse mortgages. Do you lose your house if you take out a reverse mortgage?
You don't, Nick. No, that's a myth. With a reverse mortgage, the property belongs to the homeowner. There are some responsibilities, of course. You do need to pay your property tax. You do need to maintain the home, pay your utilities. But that goes with any mortgage, right? You do need to maintain the property and pay the taxes. But the home is owned by the homeowners, and they do not have to pay back the reverse mortgage until they sell the property or all homeowners have passed away.
So, Mike, how does a reverse mortgage work?
Good question, Nick. It's very similar to a normal mortgage. What happens, the only difference is that with a normal mortgage, the interest goes down every month as you're making monthly payments. With a reverse mortgage, there are no mandatory monthly payments. So the difference is the interest will accrue. It goes in the reverse direction, which is upwards. And essentially what it is you are tapping into your home's equity. You are getting either a lump sum or a monthly payment provided to you from that mortgage itself.
So, Mike, on a reverse mortgage, what can I use the funds for?
Pretty much anything you want, Nick. So one hot topic, as you've probably heard, is mortgage rates. They're going down in the media. They're going down, but they're a lot higher than they were 5 years ago. And what's happening is a lot of retirees are now facing increased payments on their mortgages. So what the reverse mortgage can do, which is my favorite thing, is that you can get the reverse mortgage to pay off your entire mortgage, pay off any consumer debt you have, and you now have a $0 per month payment. So I tell my clients, listen, you're paying $3,000 a month for your mortgage, your debts. How would you feel if in 30 to 60 days your payment was now zero? how would that change your life? And they say it would change everything because, you're essentially living payment free in your home. That's the difference with a reverse mortgage versus a regular conventional mortgage.
Can I take the money out and spend it on other things?
Of course, yeah. So a lot of my clients, what they do is they have adult children who unfortunately are still renting. Maybe some are living in the parents' house still. And they just want to buy a house. And the biggest thing stopping the adult children from buying a house is not having a down payment or not having enough. So what some of my clients will do is they will give what's called like a living inheritance. Here's some money to go ahead and buy your first home, right? Some people want to give their money with a warm hand versus a cold hand. Get to see their children or even grandchildren enjoy some of that inheritance while they're still alive.
Can I buy a house with a reverse mortgage, Mike?
You can, yeah, absolutely. Yeah. If you have enough equity in your home, you could take out some money. You can buy yourself a home overseas if you want. If you want to get a home maybe somewhere warm for the wintertime, you can use it to buy a cottage in Canada if you want to. You could even use it to buy a downsize home, assuming your home is worth $1 million, it's paid off. If you want to buy yourself, let's just say a condo for $500,000, you could then use the reverse mortgage to buy the condo upfront. And then if you decide to sell your current home, you can always use that to pay off the proceeds of the reverse mortgage or not, to just keep the money from the sale of the house. It's up to you.
So, Mike, what are some of the pros of a reverse mortgage?
Well, the main pro, Nick, is just more cash flow, right? If you have a mortgage and debt and you have them completely paid off, that's more money in your pocket. So if you do have an investment portfolio that you're drawing from just to pay your bills and your mortgage, if you no longer have a mortgage payment or a debt, you can actually maybe withdraw less from your portfolio and have that money last a lot longer.
Mike, these are borrowed funds. Does it affect your income?
So the best part about a reverse mortgage is because it's actually a loan, it does not count as income. So if you get a lump sum or you decide to take a monthly payment from the reverse mortgage company, it will not impact your old age security payments, and it won't even impact your GIS, which is guaranteed income supplement. So it does not count as income whatsoever. So you can increase your cash flow without losing your government benefits whatsoever.
Right, and you don't have to declare it on your income tax return as well.
It's not an income. Now, if you invest the money in a portfolio, you have to declare it. But there are financial planners that can work with you and they can make sure that you're not taking too much income from that portfolio so you can still maintain your benefits across the board. There's no right or wrong answer with a reverse mortgage. It really comes down to what the clients want, right? So if somebody wants to live in their home, they want to be essentially mortgage payment free, debt free, that's the benefit of the reverse mortgage. It's a reverse mortgage and a regular mortgage, it's an apples to oranges comparison. They're not the same. The regular mortgage, from a bank, for example, it may have a slightly lower interest rate, but it has a monthly payment attached to it. The reverse mortgage has no minimum payment whatsoever. And that's what sets it apart from a normal mortgage.
So it's easy to qualify for a reverse mortgage?
Much easier than a regular mortgage or a line of credit. Because with a reverse mortgage, your credit does not have to be perfect. It's what you qualify for is actually based on your age and how much equity you have in your home.
What are the downsides to a reverse mortgage?
Yep, good question as well. Well, like you mentioned before, it accumulates interest. So the reverse mortgage the interest will accumulate upwards versus going down. One of the things you can do to offset that is that the reverse mortgage companies will allow you to prepay some of that interest if you want to. So to give you a very simple example, if I'm working with a couple and they have a $3,000 per month liabilities, mortgage, credit cards, debts, and we pay off everything, that $3,000 a month payment is now gone. If they wanted to, they can take maybe $1,000 of that freed up money and put that towards the interest to minimize the accumulation and still keep the other $2,000 a month as cash flow for themselves. So there's flexibility there.
Mike, this sounds like reverse mortgages are a little bit more risky. Does it come with a premium when you're shopping for this type of product?
Well, the rates themselves are higher than bank mortgage rates. And the reason for that is with a bank mortgage, you're making a payment on it from day one. So the lender, the bank themselves is getting paid on it from day one. A reverse mortgage company, if they're lending you, for example, $500,000, they may not get their payment for decades, right? So there's more risk on their end as well too. So they do need to charge a bit more, of course. But again, that money is only due when you sell the home or when both all homeowners have passed on, essentially.
How does one get a reverse mortgage?
Great question. you have two options. You can call the companies yourself, or you can engage with a mortgage agent like ourselves. The benefits of working with a mortgage agent is this. There was a time when there was only one reverse mortgage company in Canada. Now there's 4. And the reality is every company, well, whenever you call them, they're going to toot their own horn why they're the best company to work with. But the reality is every company is different. They have different pros and cons. They have different areas they lend in. Some areas they do not lend in. Some lend more money than others. Some have better rates than others. Rather than the homeowner calling each company and doing all the work themselves, you can call us and we're going to ask you very specific questions. What is your timeline? How long do you think you're going to live in the home for? How much money do you need? Where do you live? And our job is to then help them choose the best mortgage company for them based on their needs.
Yeah. So it sounds like, I know we're tooting our own horn, but using a mortgage agent makes a lot more sense than I'm trying to do it on their own.
It's less work, right? I mean, you're going to get unbiased advice, right? Because again, for me, it doesn't matter which company the client chooses. It's up to them. What I care about is, are they going to get the best? Are they working with the best one for them? Is it going to make the most sense for them? Again, whenever someone is needing a reverse mortgage, obviously mortgage rates are important, right? That's always a very important topic. But, depending on how much you need and where you live, maybe one company might be your only option at that point. And then that's the one that we need to work with based on your situation. Now, for some people, maybe they have more choice, and that's where we'll help them fine tune their selection based on, again, whatever criteria they need.
Now, Mike, you've done a number of reverse mortgages over the last year. Can you give some examples of your clients? Don't
Sure.
give us names. And how they use the mortgage and how did they benefit from the reverse mortgage?
One example I can think of is just recent, actually. I have a client that she wanted to buy a home to downsize into. She did all the right things. She went to her bank first. She went through the pre-approval process. She said, I want to buy a home. My house is fully paid off. My intention is to get a home equity line of credit to buy the new property. And then what I'll do is I will then sell my home later on in the year, pay off the line of credit in full, and then essentially live mortgage free. So she was pre-approved. She went ahead and had the offer accepted on the new home, went back to her bank only to find out that they made a mistake. She was not in fact approved for the line of credit. Again, she didn't make enough money for it. She had her realtor call me up, and what we did was we got her a reverse mortgage to buy the new property. In this case, this reverse mortgage is fully open, so there's no penalty to pay it off. And the best part, again, there's no monthly payments whatsoever. So now she's going to be able to purchase the new home, still keep her current one. And then when she's ready to list it and sell it, she can then do so and pay off the reverse mortgage without any single penalty whatsoever.
Mike, do you have any examples of individuals who want to stay in their homes, but due to age, health reasons, they needed more money, right?
Yes.
But didn't want to give up their home?
Yeah. Funny enough, I had a client that when I first talked to him, at one point he needed to just refinance his mortgage. He had some debts and a mortgage and he wanted to consolidate everything into one, which we did for him. A couple of years later, he gave me a call, and unfortunately what happened was he had contracted an illness and it forced him to retire early. And what happened was he had to deplete his savings to make the mortgage payment. And unfortunately, he racked up more debt, just paying the bills, paying life, because his income was no longer coming in. So he called me up and we discussed the option of maybe refinancing again. But the problem was, the mortgage rate he had now was way lower than what rates were at the time. And he was only going to save maybe $300 or $400 a month, which was not going to impact him very much. She said, Mike, tell me about reverse mortgages. I said, well, I thought you didn't like them. He goes, no, tell me again from scratch. Maybe this is now the right time to learn more about it. So I said to him, listen, very simply, you're paying $3,000 a month now for all your bills. In about 30 to 60 days time, we can pay everything off and your new monthly payment will be $0 per month. How would that impact you? He says, well, it's going to make a big difference. He also wanted to have some money to travel a little bit before he couldn't anymore. So long story short, within 60 days, we had his mortgage paid off, all his debts paid off. He took out some extra money to travel and just kind of live life a little bit. And, he can now live in his home without any financial stress. And, he became a believer in why reverse mortgages can make sense for a lot of people. It's another great reason for the reverse mortgage too, Nick, is that some people are getting, older in their years. They're having a lot of health issues. And, they may need a lot of care, round the clock care. And you got two options. You can sell your home and move into a retirement facility, or you can stay in your home and take out some equity and then be able to afford in-home care instead. So you get the care you need, but you get to stay in the home you love. And that's another benefit as well.
So again, thanks, Mike. Thanks for coming into the Mortgage Den. And folks, I hope you got everything you needed to know about reverse mortgages. And we'll see you soon at the next podcast.